Thanks very much, Nicholas, and welcome everyone. Nice to be here in person rather than zooming in from somewhere else in the world. In fact, quite novel, because I thought when I arrived this morning, I thought we were just doing a video conference and talking into a screen. So wonderful to be here and wonderful to see real people. Great to have Resource Rising Stars. Obviously, we're not in Queensland. Look forward to giving you a little bit of an update about Sandfire and what we are about as a business as we're going through a transition in our organisation and really trying to lay the foundations to build on as we go forward. Recently, disclaimer, you can read at your leisure. Recently, as an organisation and as we came to the understanding of the DeGrussa mine and what was happening there, we've sort of sat down and reassessed what our business can do. We've had a wonderful time up there. I will talk a little bit about more the prospects in that part of the world, but essentially we've reset our strategy recently, and we've got five key imperatives in our business, and at the end of the day, we're in this business to create value for our shareholders and our various stakeholders. The five key imperatives in our business at the moment is to execute delivery in terms of what we have as a business. We have two mines in Western Australia, DeGrussa, Monty, and an operating hub there. We are looking at building in Botswana, so bringing that project into production. We have permitted a project in the US, so we want to get that into production. Number two is to build a sustainable production profile. So we're looking at other business opportunities where we can add into our business and build on that, looking for acquisitions, inorganic business acquisitions. And so we're active in our business development. Number three is to look at accelerating discovery. We have an extensive portfolio of ground holding. We're about the top 7th or 8th tenement holder in Australia. We're the largest tenement holder in Botswana. We have a significant land holding in Montana, USA. And essentially is to capitalise off those significant areas of interest that we have got, that we've spent a long time. We're a large tenement holder in New South Wales as well. So we really want to accelerate the discovery. Where we sit at the moment, we have a substantial exploration campaigns on foot. We want to also make sure we have the right people doing the right thing in the right place, so empower our people. And number four is to ensure we optimise our capital structure in our business. So they're the five key things. As Nicholas said, you know, pre-discovery, we're a 4-cent company. I remember presenting at Resource Rising Stars many, many years ago, and then we made the DeGrussa discovery. I think we peaked out during that phase of time at a share price of over $10. We sit at about mid-4s at the moment. Underwhelming in my view, and I think significant potential going forward off the base we're in. We're going through a little bit of a transition as a business. It's interesting, in the last couple of years we've been able to amass through the great operations $400 million in treasury. We also have some investments in our business. We've got about $70 or $80 million worth of liquid investments in other listed companies, which are highly tradable. So when we sit and analyse that, we say, well, if the market value is $800 million, or as Nicholas said, order of magnitude, there's about $300 million in terms of the value assigned to the projects that we have in the company, because you take off the cash and the other shares we've got of nearly $500 million, it puts a value of $300 million on our resource assets, and I think that's incredibly the wrong number. So I think watch the space in a sense. We are busy, as I said, across the globe, and we are transforming as a business. The last year for us in 20 was a record year, and the first quarter of 20 has been a record quarter. We've had record upon record. It really has been a printing press in terms of an operation up here in Western Australia at the DeGrussa Monty copper gold mines. A guidance for this year will be order of magnitude 70,000 tonnes of copper at relatively low C1 costs. C1 costs in the last financial year was somewhere below sub 60 cents. Copper at the moment is about $3.10 a pound, so if you can produce your cash costs at under $1 a pound, you are in the low quartile, you're making good margins. In the last 12 months, our cash margin at site was something like 62%. We had revenue of $657 million, and I think our cash margin from the site, pre-tax, was over $400 million in the last 12 months to 30 June. So it's a real cash-generating machine, and when they work, and put it in some perspective, the DeGrussa operations up the road here are small. 1.5 million tonnes per annum is a small operation. It's extraordinarily lucrative. And that's why we'll continue to explore up there. What will also happen is we will be transitioning. We're doing a lot of work at the moment. We were up there in Western Australia exploring for gold. We made a copper discovery. So the old highway project will be a project that we are doing exploration on at the moment. We will come out with a resource on that project towards the end of this year, and we will transition the copper project of DeGrussa into a gold operation, relatively modest compared to the copper operation, but nonetheless being able to extend that mine life. So that work is on foot. Botswana, we acquired Mod Resources about 12 months ago. We've been busy integrating that into our business, and in the next couple of weeks we'll come out with an optimised feasibility study for a project there, and that will be a significant copper project that is really at its infancy, and we're looking at scoping studies to take that. It's a big open pit, or pits, from 3 to 5 million tonnes as a scenario, and I'll touch on that a little bit more. We are the largest tenement land holder in Botswana at 26,000 square kilometres. It is a global world-class scale belt. There are very few available left in the world, probably none, in terms of looking at these base metals opportunities. So we're really excited, but it takes a little bit of time. The resources sector is like running a marathon. It's not a sprint, it's a marathon. So it'll take some time. Black Butte in the US, interesting about that, we invested 6 or 7 years ago. We've invested $60 million. We own 85% of a Canadian listed company called Sandfire Resources America, and that company has secured a mining permit in Montana, which is the first new hard rock mining permit issued in Montana in 26 years. So we've been busy over the last 6 years focusing just on getting the permit rather than exploring, and we've got a modest little resource there as we talk about. And what we'll do now that we're permitted is actually go through a process of actually trying to make the economics of that project work better. But it takes a little bit of time. As I said, we have good cash in the bank. I want to focus on, and really the highlight of this presentation and what will happen within our business at the moment while we're busy generating cash from Western Australia, is working out how we reinvest appropriately in Botswana to ensure that we're in that commanding position and can leverage off that as we go into what we think is going to be a fairly strong and a good economic recovery coming post-COVID, or coming through that, with world governments looking at infrastructure and development and a whole bunch of other things. So we're going to focus on this to some extent. We're in the process of the Mateo Mine. It's Botswana, the language of Setswana, and Mateo means a foundation. So we expect the new focus for us will be around the Mateo hub. We're looking at the T3 operation, which will be a 3.2 million tonne per annum operation, but at the same time we're looking at these other deposits, and clearly we've made a discovery at another deposit called A4 resource, and shortly we'll be coming up with the optimised feasibility study for T3 as well as a resource for A4, ultimately a reserve for A4, and then we will ultimately blend in A4 into T3 to create a bigger profile of production going into that central hub. We have a number of other targets in the region, by way of example, A1, T3, T2, it goes on. There's a raft of different discoveries that we will be following up on to essentially establish the footprint in Mateo, and then having satellite feeds putting ore into that facility. So we see a lot potential for a long life mining operation hub, not just at the Mateo mine, but also through the belt. This for me, and we've been working on this for some time, we've actually been in and out of Botswana looking at opportunities over the last 4 or 5 years. In fact, the area to the grey on that map, I call this map for us at the moment, with respect to our African investments, the money shot. And why do I say that after being in the resources sector for 35 years, is we have a commanding ground holding. As I said, we're the largest tenement holder in the country. To give you some sort of perspective, to the grey area to the north of that slide, northeast, essentially is our neighbour. That was a project we looked at buying for about $400 million about 4 years ago, and we failed. The group wanted 800 million. We negotiated for 6 or 7 months. We didn't get there. And that group, which is the London Investment Group, are now building that project, and they're building a project at a place called Zone 5. But to give you some perspective, those yellow stars in that grey area amount to in excess of 500 million tonnes of copper mineralisation, copper-silver, at a grade of just over 1% copper, which for scale is good, and at this copper price is good. And to give you a perspective, those collective yellow stars add up to about $45 to $50 billion worth of contained copper mineralisation. So that's pretty exciting for us to see something of that scale. If you look at the pink area, the extent from us from the top to the northeast to the southwest, we've got a strike length of 400 kilometres. We've got a breadth in the order of 160 kilometres. And essentially everything in that belt you see through the central location, and where we have brown-looking dots and blue dots and yellow stars, it's copper mineralisation or a potential copper mine that's going to eventuate. So we've got 3/4 of the copper belt, they've got 1/4 of the copper belt. The northeast has had lots of exploration, the southwest has had limited exploration over the last 20, 30 years. And why is that? Because it was easier to the northeast, it was outcropping mineralisation, there was no calcrete cover, and where we are, there's a little bit more, it's been a little bit more difficult historically. So no modern mining exploration has occurred in that area. So for us, it's a wonderful opportunity. So we're focusing a little bit at the moment around that T3 project area, the square, little box in the middle, about 1,000 square kilometres, and we're having great success. We have got 12 drill rigs running there at the moment, and as a company, we have something like 25 drill rigs running in different parts of the world at the moment. But certainly Botswana is going to be something that's got huge potential. The government is massively supportive. They're putting in a $500 million power grid line straight down through the middle of this copper belt, and it's a country that is deeply invested in resources, and effectively the greatest revenue earning for the country has come out of diamonds, has come out of resources, with Anglo-American and De Beers being holding 2 of the largest diamond pipes in the world in Botswana. So it's rich in resources in that context. It's got a great history. It's a great environment. #1 place to do business in Africa. So we're really happy about that, and you'll hear lots of news about that over the next few weeks. In fact, the next thing that will come out will be the optimised feasibility study for T3, a resource for A4, and also a plethora of exploration results through that belt. So it's just taken some time. Clearly, things like COVID have delayed some things along the way and made it a little bit more challenging, but we're looking forward to getting on with it. There's just a quick diagram of what the facilities will look like, the schematic. Everything you see there will be built for the 3.2 million tonne per annum operation. The bits in pink are potentially will be the expansion requirements to go to 5.2 million tonnes, essentially be another mill and another some tankages, but essentially relatively simple, and we're going to establish the first operations really capable of that larger scale. So it's going to be an easy upgrade. From my perspective and the team, I've been involved in building 9 mines in different locations in copper, gold, diamonds, underground, open pit, high grade, low grade over the last 34 years. This is not very complicated to get done, and so I have all the confidence in the world that once we put the plan out, the plan will be executed, subject to COVID or something like that not taking over. It will really be easily executed. I'm not a geologist, I'm a chartered accountant, but essentially what is the focus of attention, looking at this electromagnetics, essentially you can see at the bottom of the screen T3, it's a sort of this red domey looking thing, and off to the left there you have the A4 dome. But the additional targets you'll see further up the screen there, A1 dome, it's this big red blob, signature, and that's the next target we're going to pursue. And what we're trying to do here is target high-grade satellite deposits that can actually give us additional feed. In terms of grade, the A4 dome is looking at a slightly higher grade than T3, so that's it's going to be a little bit of icing on the cake. And we really can't wait to get into the next group of targets, and A1 will be the next, A1 dome will be the next target. We're looking for better grade to enhance the value, the margin, being underwritten by T3 as the starting project, but then really the money and the margins will come from additional deposits in that region once you've paid for your capital. So and it's a great opportunity to get set, get it right, get set, and then build off the back of that. Looking for additional tonnes to extend mine life, and then looking at opening up the entire belt, this 400 linear kilometres that we've got the opportunity. So work is busy in that area. In terms of A4, we are looking at some higher grade deposits, so these are sort of dome geological structures sitting closer to the surface. we talk about the area we're currently drilling, but that sort of red area is the contact zone that we will be following up on in due course. So whilst we have 2 open pit resources that we know will be developed, the likelihood and the opportunity for underground mining and deeper deposits is significant, and we just need time to get through the process. Our neighbour to the northeast has the surface has been eroded, and they're dealing with deeper mineralisation, and they still have, as I said, these 500 million tonnes of economic mineralisation. So the potential for us not only to have open pit resources but to have deeper resources is high. And behind it all, I suppose, just to touch on, for us, lots of exploration still in Western Australia. When you go and discover a 5% copper ore body, and to put that in some perspective, that's almost like finding, because everyone's into gold at the moment and gets it, that's like finding almost 20 grams per tonne gold ore body. 20 grams per tonne is 3/4 of an ounce of gold. So to get some sort of context, 5% copper would be the equivalent of about that. The Monty discovery next door to DeGrussa, 10 kilometres away, was 9% copper. So what's that equivalent to? Well, that's equivalent to nearly 1.5 ounces, or 1.25 ounces of gold equivalent. So, and if we look at the stuff in Bots, a 1% copper ore body in value terms is equivalent to about 4 grams per tonne gold, 3.5 roughly. But it gives you a context of the value proposition there. Lots of exploration still in Western Australia, and the reason is because of the sorts of results we've received. $4 and a bit billion worth of revenue. Margin has been over $2 billion. It's been consistent for a long period of time. We've paid lots of dividends, and we have significant profits after tax, and we've got cash at bank, as we know. It's a story of consistency at DeGrussa, pretty much mid 60,000 tonnes of copper, good gold for 7 or 8 years straight. It will continue to do that for 21, 22. Then it will transition into a smaller gold operation, but nonetheless still a viable gold operation, while we continue to explore for repeat copper mineralisation in Western Australia, because the sorts of discoveries we've made, those volcanogenic massive sulfides, VMSs, are super high grade. And we don't think in that region that we've discovered all of them. There's been 2 discoveries, and we think there's great potential in that region. We started off with 400 square kilometres when we made the discovery around DeGrussa, and we had been working this ground, listening to Headley before. We'd been exploring here for 15, 16 years prior to making that discovery. And so we made the discovery around DeGrussa essentially because we couldn't go to the old highway project, which we're going back to now, that year, and we've made the discovery on the right. We've now got some 7,500 square kilometres in that region, still significant amounts of it still to be tested. Our exploration budget is somewhere in the order of $20 million here in Western Australia, and globally we'll be spending $45 million this financial year. So we're strong in terms of the exploration spend, and we're looking forward to making further discoveries. I won't detail it, but this is the old highway gold resource. We will make a gold resource announcement by the end of the year, and that will come together with some retreatment of tailings to actually underwrite the gold operations for about a 4 to 6 year period as a minimum, post the current copper operation. Just to quickly touch on the US, as I said, first mining permit issued in Montana in 26 years. We haven't done any exploration. We have put a feasibility study on the table. It's modest, and the job for us now, whilst that project is being assessed, is to actually make it work. So it is like a marathon. Anywhere else in the world, we would have invested 6 years ago, we would have been exploring our heads off, but in the US, complicated. And we chose to spend no money on exploration since we made the original investment. We wanted to see whether we could get a permit. And what we didn't need was a bigger project we couldn't permit. So we said, guys, no exploration money, not a cent in 6 years, which is unusual. In Australia, Canada and Africa, you would be actually exploring aggressively to make the projects work. So here for us now, we've actually got to make this work economically. This is not a project we'd race off and go and develop today. But if those numbers can be tripled or quadrupled and then pay for that capex, then we'd get off and go and develop that. So I think this will emerge over a period of time. Really just to wind up from our side of things, great cash flows coming out of DeGrussa Monty, so we'll be strong. We sit here today going, at this copper price and listening to Headley in the background, we've got $400 million in the bank, we've got nearly $100 million in shares. We will generate $300 to $400 million in free cash in the next 2 years. So we're trading at our cash backing effectively. and all the other assets, whether it be Botswana, the US, and our exploration in Australia, Queensland, New South Wales, is essentially you get it for free. So from our point of view, we're in a very, very good position. We can develop mines. We're going through this transition, and we believe with the world and the economy, with a bit of stability coming in, investment into lots of different things, I think the place for fundamental resources is going to be strong over the next long period of time. And certainly we've seen resources being pretty much the backbone during these difficult times. So we're looking forward to leveraging off the back of where we are at the moment. Thanks very much, Nicholas, and happy to answer any questions if you've got.